61% of baby boomer homeowners say they'll never sell their homes. And here's the kicker. Inventory is up 33% year over year, but these homes are sitting on the market for months because sellers refuse to accept reality. Listen, we've been tracking real estate data for over a decade, and what we're seeing right now is unprecedented. According to Clever Real Estate's September 2025 survey, the percentage of boomers planning to age in place just jumped from 54 to 61% in a single year. That's millions of homes locked away from the market. But here's what's happening beneath the surface. Right now, there are 768,000 single-family homes sitting unsold on the market. That's more inventory than we've had since 2019. 12 states, including Arizona, Colorado, and Florida, are now above pre-pandemic inventory levels. You know what that means? Opportunity. Massive opportunity. Today, we're going to show you exactly how smart buyers are getting homes at prices we haven't seen in years, why boomers are trapped, and 3 specific negotiation tactics that could save you $50,000 on your next purchase. But first, did you know that in 2024 there were more home buyers over age 70 than under age 35? According to NAR's latest data, baby boomers now make up 42% of all home purchases, while millennials are at 29% and Gen Z is at 3%. This isn't just a demographic shift, it's creating a market distortion that's about to crack wide open. Why are Florida homes with motivated sellers suddenly appearing everywhere? What's the mortgage recast strategy that could cut your payment by $600 a month? Why are 38% of homes taking price cuts right now? Before we get into all that, please take 2 seconds to help me out and hit the like and subscribe if you find this video interesting so far. Each like, subscribe, and share helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, let's continue. I'll answer all of these, but first, you need to understand the trap boomers have created for themselves. 83% of homeowners have mortgage rates below 6%. The average existing mortgage rate? Just 4.3%. According to Bankrate, 54% of homeowners say they wouldn't sell at any mortgage rate this year, up 12 percentage points from last year. Think about that. More than half of homeowners are so locked in that nothing will make them move. According to Fannie Mae, 58% of their single-family loans carry rates below 4%. These people are paying maybe $1,800 a month for homes that would cost $3,500 monthly at today's rates. They're trapped, completely trapped. But while boomers refuse to sell their primary residences, something else is happening. They own second homes, investment properties, inherited properties. Construction coverage data shows boomers own 30% of all homes nationwide. In Hawaii, that's 43%, Florida, 41%, and Redfin reveals 30% of baby boomers say their homes are almost completely paid off. We're talking $300,000 to $400,000 in average equity per household. But they can't tap it without selling. And they won't sell because of the rate lock-in. It's a perfect storm. Let me show you what's really happening with inventory. According to Altos Research, we have 27% more homes on the market than last year. In markets like Austin, Tampa, and Phoenix, where boomers flocked during COVID, inventory is up over 40%. Remember Florida? Here's why those motivated sellers signs are everywhere. Florida is one of 12 states now above 2019 inventory levels. Combine that with 41% boomer ownership and insurance costs that jumped 40% in 2 years. These sellers are bleeding cash on empty properties. HousingWire reports that 38.2% of homes have taken a price cut. That's not normal for winter months. Usually, we see 35% with cuts that drop quickly for holidays. Not this year. The cuts are holding steady or increasing. The Bank of America Institute found new home inventory hit 9.8 months of supply, the highest since 2007. But here's the difference. No subprime mortgages, no mass foreclosures coming, just a standoff between stubborn sellers and patient buyers. And patience is winning. Now, let me show you exactly how to buy at 2019 prices. It's not about waiting for a crash. That's not happening. It's about understanding market psychology and negotiation leverage. U.S. News data shows how prices are expected to rise just 10 to 11% total from 2025 to 2030. That's basically inflation. The days of 20% annual appreciation are over. Here's what smart buyers are doing right now. Strategy number 1, the extended market timer. Target homes on market 60 plus days. Sellers reduce prices by 5% after 30 days, another 5 to 7% after 60 days. In buyers markets like Florida, Texas, and Arizona, offer 15 to 20% below asking on these stale listings. Strategy number 2, the comprehensive negotiation. According to CNBC's Dana Bull, you can negotiate 15 different elements. The big one, seller-paid closing costs. On a $400,000 home, getting the seller to cover $12,000 in closing costs equals a 3% price reduction. But sellers accept it more readily because the sale price stays higher. Strategy number 3, the mortgage recast play. Buy your next home, then when your current home sells, apply that equity as a lump sum to your new mortgage. Example, a $450,000 home with 20% down at 6.5% equals $2,275 a month. Apply $100,000 from your previous sale, recast the loan, payment drops to $1,643. That's $632 less per month. Charles Schwab data shows homes sitting over 30 days typically sell 7 to 10% below initial asking. But you need to be strategic. Never show your cards early. Play it cool. Ask questions that plant doubt. How long has this been on the market? Why are the sellers moving? According to Homeowners Alliance, 39% of buyers pay asking, 39% get below asking, only 10% go to bidding wars. Good odds if you know what you're doing. Start 10% below asking in normal markets, 15 to 20% below in buyers markets. Make your offer attractive in other ways: larger earnest money, flexible closing date, pre-approval from local lenders. Target homes with 2 to 3 price reductions. Make an offer another 5 to 10% below their current reduced price. Include market analysis showing comparable sales. This approach succeeds 73% of the time in buyers markets. Now, should you wait for rates to drop? NAR predicts rates will average 6.7% through 2025, maybe hitting 6% by year end. Fannie Mae says don't expect below 6% until at least 2026. But even when rates hit 6% briefly in September 2024, demand surge was minimal. That 6% threshold isn't low enough to unlock inventory from rate-locked sellers. The sweet spot is right now. Maximum inventory, minimal competition, motivated sellers, negotiation leverage. By the time rates hit 5.5%, competition will be fierce. You'll have missed the window. Lawrence Yun from NAR said, if rates dropped to 6%, we'd see 160,000 additional first-time buyers enter. That's your competition waiting on the sidelines. What will make boomers sell? According to Clever Real Estate, 57% say only serious health issues. Another 39% cite maintenance becoming too difficult. The average boomer is now 65 to 78 years old. The pressure is building. Plus, property taxes in Texas and Florida are crushing retirees. A home bought for $300,000 in 2019 might be valued at $500,000 today, potentially 67% increase in property taxes on Social Security income. Resi Club predicts a wave of boomer selling starting 2026-2027. Not because they want to, but because they have to. Here's your potential action plan. Step 1, identify target markets. Look for high boomer ownership above 40%, rising inventory, 60 plus days on market average, 35% plus of listings with price cuts. Step 2, get financing ready. Get pre-approved with 2 to 3 lenders. Consider ARMs with caution if selling refinancing in 5 to 7 years. Research down payment assistance. VA and USDA loans require 0 down, FHA only 3.5%. Step 3, build your team. Find a buyer's agent specializing in negotiations. Get a thorough inspector. Line up contractors for renovation estimates. Step 4, master the offer. Never offer asking first. Request seller concessions. Be ready to walk away, your greatest negotiation tool. Here's the bottom line. We're in a once-in-a-decade buyer's opportunity, but most people don't see it because they're focused on rates instead of total opportunity. Yes, rates are 6.5 to 7%, but prices are flat. Inventory is surging. Sellers are capitulating. Factor in seller concessions, and you can buy below 2019 prices in many markets. The math: $400,000 home at 3% equals $1,686 per month. Same home at $350,000 after negotiation at 6.5% is $2,213 a month. That's $527 more monthly. but you're building $12,000 equity year one with just 3% appreciation. When rates drop to 5%, refinance and payment drops to $1,879. You can't refinance to a lower purchase price, but you can refinance to a lower rate if they drop. According to Redfin, 1/3 of boomers can't afford a home like theirs in their own neighborhood today. That's seller motivation building. Meanwhile, Texas, Florida, and Arizona are seeing inventory levels not seen since 2018. By December 2025, we'll see another 15% inventory increase. Rates will hover 6 to 6.5%, but once election uncertainty resolves and Fed policy clarifies, buyer confidence returns. When that happens, this window closes. You have 6 to 8 months before market psychology shifts. 6 to 8 months where sellers are in denial, buyers are fearful, and inventory is building. The boomers aren't selling primary homes, true, but they're bleeding on investment properties. They're facing health realities. They're holding on to peak 2022 pricing that no longer exists. Every month they wait, their position weakens. Every month you wait, competition grows. The opportunity is here. The data is clear. Start your search today. Make that first offer this week. Because while everyone else reads headlines about the housing crisis, you could be signing papers at prices we won't see again. The clock is ticking, the window is open, but it won't stay that way for long. If you found this video interesting, please subscribe, share, and watch this one as well.